Hi, Paul Gerard from Price Accounting Services. Welcome back to this video in our investor channel on AMIT and Costbase issues. So, Australian Managed Investment Trust is what AMIT stands for. Fancy name. Another further an acronym to confuse taxpayers. So, look, let's be honest, most investors keep or like to keep very simple records, but with the increased use of ETFs and managed funds, we commonly see these AMIT and tax deferred amounts. So in a prior video where we broke down a tax statement from Regal, in the prior video to this, you could see that there are different elements, tax elements to the amounts distributed, and that the broker amount reported in the broker statement was nothing like that of the actual income, and it missed even $10,000 of withholding tax that had been withheld. So, word of caution, don't blindly accept your broker reports unless you have a very good full service broker. Okay? So, AMIT amounts when they're distributed aren't taxable in themselves, but they affect tax later. That's the typical issue, excepting when it's labelled as tax exempt. If it's labelled tax exempt, then it's exempt. Okay, so you can disregard it rather than treat it as a issue to consider. Okay, so you can always think of tax deferred amounts or AMIT distributed amounts as a return of a part of your original capital, so that it then later affects your capital gain later. Okay, so it's important that your records can track the cost base. So the brokers that do provide that full service, very helpful. For those that don't, you need to do it. Okay? Because some brokers, but very few, track the cost base, which we saw in the other video. There are some other cost base issues that occur for shares though. A company can pay a return of capital. Now, a return of capital may be paid at the same time as a dividend, or it might be paid at a different time. And a return of capital is a return of part of your original investment. So if you originally bought the shares for $4 and they give you 50 cents per share back, then your cost base has to be adjusted in your records to $3.50, okay? Because your later capital gain calculation should not consider what you paid on the contract. It should also include the adjustment. And the ATO are all wise for this. They do look for that. Excuse me. You can find information on some of these CGT events. I find Google to be very good for helping taxpayers at times of preparing a CGT calculation. You can look up CGT events 2022, for example, and see common CGT events that the ATO might list for certain companies, such as returns of capital, reconstructions, demergers and things like that. Good source of information. So if you do receive a cost-based adjustment, make sure you've adjusted it. But now we're going to move on to another video, which I hope you'll watch, which deals with corporate actions, which takes the issue of cost-based a little bit further. So we hope you join us on that, and otherwise we'll see you soon. Cheers.